You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 12th of June, 2017. We see everything down for the day on all four of our ETFs. Before we jump into those, this is the last time we're going to be offering our quarterly chart training. That is how to use our quarterly chart, which is a magnificent chart. This is only for long-term investors and financial advisors. If you are interested, you have to be subscribed to our daily market review. You do that at chartingwealth.com. As long as you are subscribed there, we'll be happy to review your email telling us why you are interested in taking this course. There is no charge for it, but we want to make sure that we're offering it to folks who can actually use it and who are interested. Tell us a little bit about yourself, CW at chartingwealth.com. Those of you who look at this, and I know a number of you have seen it, and a number of you are extremely excited about taking this class. When you look at how this quarterly chart works, would have gotten you out of that big drop that occurred in 2001 through 2002, would have gotten you in late 2014 for that run up all the way through almost through the end of 2007, would have gotten you out for the big crash in 2008, would have gotten you back in right there toward the end of 2010 for the latest run-up. It is absolutely beautiful. Seems to work time and time again. Has over the last 20 years. We love it. We want to share it with you. Again, subscribe to the daily podcast. You do that at chartingwealth.com. Email us. Tell us why you want to take that course. CW at chartingwealth.com. We should have it ready in a week and a half, 2 weeks. At the outside, we will be providing it to all of you. Thanks so much for being with us today. Let's jump right in. Some interesting things happening. We see the S&P 500 as far as our weekly chart goes. We see that we're running sideways. We don't like that on our PPO, the price percent oscillator. Derivative oscillator gaining energy. We look at the candles, they look decent. I mean, we've got two candlesticks moving up on the weekly charts. Had the 2-day vertical crossover back on the week ending on the 26th of May. And of course, the week ending the 2nd of June, we had the weekly vertical crossover. And we see up movement as far as the candles go. Things change a little bit as we hone in. The 2-day chart shows us a flattening, really a topping out. Starting almost immediately, we had an up 2-day candle on the 6th. That was Tuesday. Our jumping in point was Monday the 5th. Then everything sort of slid sideways. Now we have a spinning top that has been forming. It's the first day of the latest 2-day candle. Price movement still above the 2-day trend line, still above the weekly trend line. But as we've told you the last couple of days, we don't like the weakening we've been seeing, particularly when we had the crossover going down back on the 7th in the afternoon. We did not like that. Had a bump up in the morning, nice bump up in the morning on Friday, but then we had that slam down in the afternoon and some panic setting in. A big old long wick on the bottom, and of course that resulted in the price percent oscillator really kinking over, going down as far, and the derivative oscillator too. One of the rules that you need to always keep in mind is when things don't start going in your direction quickly after an entry point, you need to get a little concerned. I know that some people got really excited as things started bounding up in the morning, almost really crossing over there, and then with that afternoon slam down, it really affected things. So again, when we have a sideways slide like that and things cross over, it's always best to wait until the downturn has recorrected and it's gone back up again. So again, that 4-hour chart rotating over on us soon after that entry point, never a good sign. However, when we look at where things settled out, remember our entry point was 244 like 10 or 20, 244.10. And we're at 243.72, so what, we're down maybe 40 cents. So again, not a bad thing where it ended up, but I still just don't feel good about all that downward movement on the 4-hour chart. So it doesn't hurt to get out and to get back in when things look better, if indeed they look better for this up move. And again, just a long sideways slide. So don't fret, just take action. Okay, let's keep moving. We're going to go back to our weekly chart and then look at the bizarreness that occurred in the Qs. The Qs was looking so gorgeous at the end of the day on Thursday as we went into Friday. Another green, beautiful up candle that turned into a spinning red top. And our price percent oscillator kinked over going down. The derivative oscillator lost a hell of a lot of energy. And we're looking at the weekly candle. Now let's go to the 2-day candle and see what we see. It even ended the day crossing over. Huge slam down movement in the afternoon. And well, for the day, because this is just the first candle of the first of the 2-day candle, the first day of the 2-day candle. So a big slam down, broke through our 2-day trend line, destroyed it, still closed above the weekly trend line. Now remember what we've been telling you for the last few days. What have we been saying? Once we had this crossover going down occurring on the afternoon of Wednesday the 7th, we said, think about taking your money in the Qs and running. You have had a great up movement, somewhere around 136 all the way at the time to 143.50. Now, those of you who jumped in at 136, you're still at 141. But as we said, don't be afraid to take your money and jump out. Don't get greedy. Well, that opportunity availed itself all the way through Thursday and Friday morning, but Friday afternoon, bam, it hit and busted through, and you lost about $1.50 a share. No, let's see, $2.50 a share. Okay, that's not good. And again, it doesn't hurt using this 4-hour chart, as we've been saying, to use it to get you out. And then when it rotates back over going up, you can get back in and keep riding that train if it keeps going. So again, hopefully this will recover some on Monday, but those of you who are still in the Qs, see what things look like around 10:30, what you can salvage. Do not put in a market order to sell. There is no telling how bloody it could be Monday morning on the opening, and you do not want to lose every single thing you gained. And again, these are virtual trades. We are not giving market advice, trading advice to people who have real money in the market. You don't pay us for that. We don't offer that. We don't do that. But I do want you to practice this stuff. And the more you see these things you've not encountered before, the more you practice them, the more you pay attention to this, the more mistakes you make, the better you will get, my friends. And let me tell you how you document this and really learn from it. If you're not using our trader worksheets that are available to everybody who subscribes to the podcast, it's there with the emails every day. There is a PDF for a trade worksheet. You should be filling that out every time you buy a position and throughout the course of the time you're in the position. And when you exit it, it gives you a place to actually make notes on what you learned. You will learn more from your losing trades and from your winning trades. You will always learn more from them. And then, since you have it written down, you can go back and study it and learn it and remember it. The man who commits a mistake the first time, okay, that's forgivable. If you keep making the same mistakes, someday someone might call you a fool. So let's not do that. Okay, let's keep moving on. So pay attention to the Qs come Monday morning around 10:30. Let's see what's going on with TLT. We see on our weekly chart, TLT is still moving above the weekly trend line. We're about flat on the derivative oscillator. The PPO, the price percent oscillator, is still moving up. As we drill down into that on the 2-day chart, we see that it has blown through the 2-day trend line, still barely above, well, it's still above the weekly trend line. But as we've been talking about, losing energy, losing lots of energy in the price percent, well, in the price percent oscillator, yes, and derivative oscillator too. As we hone in on that 4-hour chart, what do we see? We've been talking with you about this since it started crossing over, since it started really going down back all the way on the 6th, but particularly once it crossed over going down in the afternoon on the 7th of June. should have gotten out back then. You sure as hell didn't need to ride down all of the loss that's occurred so that you lost a lot of the gain that you had made once you entered into this around the 30th at what? Somewhere around 123. Yeah, you don't want to move, you don't want to lose all that and only have $1.35 to show for it. So again, hopefully you locked in that gain somewhere around the 125, 124 level if you didn't already get out when it topped. So we'll continue to move through that. Do pay attention to TLT on Monday. We don't have anywhere near a crossover going down yet. Things could recover, and if that 4-hour chart rotates back over going up over the course of the week, get back in. Now, one of the next biggest downer besides the Qs, the NASDAQ 100, was gold, down 0.91%, almost a full percent down. What do we see going on gold? Well, we continue to see the weekly chart moving up nicely. We just went into the green. In fact, it was bigger on Thursday, but on Friday, as we look at it, the derivative oscillator is not as big as it was in the prior day, and the PPO, the price percent oscillator, is now tracking sideways, which is not a good sign for continued up movement. We look at the 2-day chart. We can, of course, see the huge drop that occurred for the first day of this latest 2-day candle, blowing through our 2-day trend line and riding right on top of the weekly. Not a good sign. And of course, how could we have seen that coming? Well, because as we told you, back on the 8th, we saw a crossover go. We actually saw everything starting to move over back on the 7th and even on the afternoon of the 6th. But we saw that big crossover going down in the afternoon on Thursday, the 8th. And of course, big down moves in the morning, some recovery in the afternoon. Now remember how great this 4-hour chart is for us. And of course, we had a great run up in gold on this 4-hour chart, jumping in all the way back somewhere. Oh, let's see where the jumping in point was. If you would have bought in the worst you could have, it would have been at 117. The best would have been around 116.5. And of course, all the way up to a high there at about 123. So some beautiful up movement in gold. But as this 4-hour chart starts to rotate over, this 4-hour chart tends to be a very accurate and happening chart for us. Pay attention to that, all of you gold bugs. Remember, when gold rotates over going down, you can jump into a virtual trade in something like DGZ, that's Delta Golf Zulu, for the short. That is an exchange-traded fund that shorts gold. In fact, when gold goes down, GDZ goes up. And of course, it started going up quite nicely back a couple of days ago. So again, you always have options with these 4 ETFs that we track. Now, I will tell you guys one thing we worked over the course of the last few days on that we are very happy with as we start to wrap up the show is this new chart that we came up with for Bitcoin. And it works only for Bitcoin. It actually uses a true strength index, and it's quite lovely as you watch how accurate it is. It uses a 2-hour chart. That was the only chart we could find that actually was trackable with Bitcoin. We're going to have some training over this coming up pretty soon. You have to be a subscriber at the website in order to get it. We're going to offer that to everybody. You don't have to send an email to us. But you do have to be a subscriber to chartingwealth.com, where we're going to share not only how this works, but we're also going to share with you a copy, a free layout, so you can have it too. And it's pretty neat. If you're interested in Bitcoin, just following it and tracking it, knowing when it's going short and knowing when it's going long, this is a great chart for that. Now again, we appreciate all of you being with us. We are here for you each and every day that the market is open. Please follow us on Facebook, Twitter, Instagram, YouTube. Subscribe to us on YouTube, on iTunes. Please also subscribe there. Give us a nice 5-star rating. We've got both the weekly, that is our weekly video that we put out there, and the daily audio. So you can subscribe to 2 podcasts there. Thank you so much for being with us, my friends. You want to write us, we love to hear from you. CW@chartingwealth.com. And of course, you can always go to chartingwealth.com. You can write us from there also. You can get all of our great training and our daily chart reviews. All the best from the team here at chartingwealth.com.